All right, let's look at ICA 12.4. One of the things you may need to assess is replacement costs. Does it make sense to keep an existing machine or piece of equipment, or should you replace it? And what you can do is you can actually calculate your net present value based on certain criteria that you have. Okay, so let's look at this. Groundhog Meats, Part A. Groundhog Meats has an old sausage machine that is slowly wearing out. It cost $8,200 or $82,000 when it was purchased 18 years ago. It could be sold for $12,500 today, minus taxes. It has been used for so long that it is fully depreciated. Its book value is zero, so the full selling price would be taxable. The expected operating costs for the next 5 years are $12,000, $14,000, $20,000, $24,000, and $8,000, meaning costs are outflows. The machine is becoming unreliable, so the appropriate discount rate is 16%. They're in the 35% tax bracket. What is the NPV of the cost of keeping the machine? Okay, so for this one, we're just looking at costs. So let's fill in what we know. 35% is the tax rate, a 16% required rate of return. We're going to look at 5 years out. And the current market value of it is $12,500. Okay, now notice there is no revenues given to us, only operating costs. So we're only going to look at operating costs for this project. Okay. So year one is $12,000. Year two is $14,000. Oops, that should be a negative $14,000. Year three is negative $20,000. Year four is negative $24,000. As it gets older, it gets more expensive. And then year five would be negative $8,000, finishing up the final year. Okay. It's been fully depreciated, so there's no depreciation costs associated with this at all. So those can be zeros. So therefore, we can add that up to find our net operating income. Oop, I went one too many. Got to be careful of that. Net operating income, I guess I'll just do it this way. I'm going to have, there's 12,000, negative 12,000 net operating costs. So we have minus our taxes. Now, one of the things we need to be aware of is that if we have a negative operating income, we are actually allowed to have a tax credit. So our taxes could be positive, which they will be for this one. So we do the same thing. We have 12,000 times our tax rate of 35%. We're going to lock that one in because I'm going to copy it over. Okay, but we also want to make this a negative because it's actually a tax credit due to the cost. So we can add those two together. So we have operating income after taxes, and then our depreciation back in, which is zero, which we don't have. So then we can add the 78 and the zero, which would give us 7,800. So if I set these up right, I should be able to copy them over, and we have numbers that look like that. So that works. Okay. So that would be our operating cash flows: 78, 91, 13, 56, and 52. Notice, right, it's taxes that affects that. Working capital, we don't have any working capital. We're not buying anything new. We're not changing anything around, so we're okay. Okay, the other thing we would have would be opportunity cost of the sale of the machine. We could sell the machine for $12,500. So since we're not, that in essence is a negative opportunity cost that we'd have to address. The tax effect on that, same thing. We're going to figure out what is our tax effect since it's already completely depreciated. We can calculate the tax effect on that of 35% of that, but I'm going to make that a negative. So we would have a tax effect. So then our capital expenditure requirements would be this plus this, 81.25. Okay, so our free cash flows then, remember, is our operating cash flow plus our working capital plus our CapEx. Year zero is going to be 81.25, and we can copy this all the way down that we would have there. So we can look at free cash flows, NPV of all of these, year 1 through 4. Oops, sorry, I need to do rate first. 16% rate. And then our future cash flows would give me that. And then we add in our negative 81.5. So the NPV, equals this. Equals this. Plus, it's not. Equals this plus this. All right. So we see our NPV is $41,032 just looking at cost of keeping the machine.